following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for unusual options activity alerts, advanced trading strategies, cutting-edge education, detailed market updates, and breaking customer activity. It's time for the One Option Show to rule them all. It's time for the Option Block with your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from OptionPit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Griegas from Options Express.
Welcome back to the Option Block, and it's been an exciting week of trading so far this week. I'm sure a lot of our listeners have been very busy trading in and out of all sorts of fun things during this beginning of earnings season. I am your host, Mark Longo, for this raucous romp through the world of options, and I am joined, as usual, by the old cast of characters, starting off with greasy meatball Mark Sebastian himself from OptionPit.com. Mark, how are you doing today?
You know, I'm doing good. I'm actually eating a chicken parm hot pocket right now, and so I'm in a great place. As you said that, I thought it might be more fitting if I was eating a meatball hot pocket, but no, sorry, it's a chicken parm.
On your recommendation, I did finally break down and watch The Expendables this week. And, you know, I had very minimal expectations going into it. I thought it would be just pure excrement on film. And it wasn't. It was actually better than that. So having low expectations made it a fun movie to watch.
It's a fun movie if you take it for what it is. You know, it's not Academy Award winning stuff, but if you like seeing a lot of people get blown up, it's awesome.
Yeah, if you like to see a lot of old 80s people and some new wrestlers and MMA people and whoever else they have in that movie just go crazy, then that's the movie for you. And it delivers on that. And that's the kind of thing Stallone probably should be doing these days instead of going back to the well with Rocky 27 and all that stuff. And then Mr. Tusaw, Uncle Mike from the mountains of Know Your Options Inc. How are you doing today?
Doing well.
Are you doing hot pocket well?
Well, you know, what's the thing? What are you going to pick? Hot Pockets? I don't know. I'd have to be awfully hungry to eat a Hot Pocket.
Oh, I bet you. If you were enjoying this Hot Pocket, you would not have to be that hungry. It's really good.
This episode of the Option Block brought to you by Hot Pockets. Enjoy your tasty, delicious Hot Pocket at a grocer near you.
We got new sponsors. We talk sports on the radio. We got it all here.
And I do want to mention before we get rolling that our announcer always says it in the outro of the show, but we probably should plug it earlier in the show, that actually we do want you guys to interact with us on this program. And so in order to do that, we have finally on my site, theoptionsinsider.com, gotten the forum working for this show. So if you go to theoptionsinsider.com/forum and then scroll down to the option block section, you can post your comments and questions for the hosts here. And if they're good, we'll read them on the show. We've already gotten a few interesting comments in there, including a few requests for more John Griegas on the show that people like him.
Yeah, no, I like him too.
And also, we do have a Google Voice number, so you could call us directly with your questions and comments. That number is 312-544-9356. Call in, leave us a voicemail with your pithy options question or comment. If it's fun and interesting, we will play it on the air, and you will be immortalized for all of your friends and neighbors, and all the ladies in your life will swoon over you. Huh. And, of course, we do have the Rotating Options Express third cheer today. They are doing some business right now, as you can imagine, on the trading desk, so they will be joining us shortly. So with that, we will dive right into the trading block.
The trading block.
welcome to the Trading Block. This is the section of the show where we discuss what's on our horizons for the current session, what's lighting up our tapes right now in terms of what we're watching in the market. Well, the market closed today, the Dow dancing around 12,011,989, up 4 points. The S&P dancing around 1,300 with 1299.54, and the NASDAQ up 15 points to 2755. Fixed cash selling off a little bit, down almost half a point to 1615. And another interesting day on the street. We're going to start things off. Well, we should tell our listeners, as we're recording this, the Amazon earnings have just come out. Amazon closed today at $184.45. They rallied almost $9 on the goodwill generated from Netflix. And we'll talk about Netflix in a second. And then also happening right now, we have Microsoft. Looks like they haven't really come out yet because the stock is pretty much unched from the close. So, yeah, Amazon looks like trending downward. We'll keep an eye on that throughout the show.
Well, there's going to be some very, very sorry people. You know what? That straddle went out around $11, and if it's out 20, there's going to be some major losers in that trade. That weekly straddle, that supposedly, in theory, is the best measure of, what are they expecting for earnings, went out under $12, and, yeah, Amazon's down $19. So that's a big, big loser. Even the Feb straddle only went out $17. So it's pretty interesting.
Yeah, I think part of it was them just giving up the ridiculous rally that they had today. I think maybe given the post-Netflix euphoria, a lot of people had revised expectations for what they wanted out of Amazon, and apparently they could not meet those expectations. Let's talk about Netflix then while we're talking about it. Those guys just off to the races at Netflix. It seems like nothing can stop that stock, and I was hoping the OX guys would be on for this because I'm sure they had a very busy day with Netflix today. It seems like OX customers love Netflix. If you watch that one at all, the vol levels going into that earnings and the skew was just out of control.
It was unbelievable.
Even in the weeklies.
So.
Yeah, even in the weeklies, straddle went out, I think, around $24 and before the earnings. And the skew, even the downside skew was amazing. It was the stock closed, I believe, yesterday at around 184. And the 155 weekly puts, these are nearly $30 out of the money puts with 2 days to go. We're trading like $1.25. It was amazing. Yeah. There was so much skew and so much downside and upside to be had in this name. It was incredible.
It was amazing. And looking at it, it had just the stock itself. It had pretty strong support at the 175 level, and then we have we don't know your options. We don't have any positions in Netflix, but there are some self-directed clients that we have as Brokers Express clients that are self-directed that have some positions in Netflix. And there was a lot of people at least in our little small section of the world, that were getting pretty concerned about the earnings announcement with Netflix, just because it was starting to go down a little bit. And yesterday, a lot of people were kind of getting a little bit nervous about it in terms of turning credit spreads into butterflies and getting out of positions and that type of thing. But wow, they hit an upper deck grand slam. That's amazing.
You know what was interesting is that the vol got so overpriced in that front month that despite the huge move, if you'd sold Feb and bought March, the calendar was actually winning with the stock up $27. That's how overpriced that front month was. It was unbelievable. The only real losing trade was that kind of weekly straddle itself lost, but a lot of these kind of premium plays actually worked in this one because it got so crazily overdone. Mark, this was something I was talking about on my blog the other day, and I wanted your thoughts on this. I was taking a look at Amazon vol leading into today's earnings announcements. And I did write about this on my blog, and I think you guys posted it on Option Insider. Is there a possibility that the creation of the weekly options is making VIX, the VIX volatility measurement, the volatility thing that they're applying, that AMZN VX, kind of less relevant if they use that VIX ideology?
Certainly seems so to me, because at the end of the day, the weeklies are a tradable product. There's actual money on the line. So in any given scenario, I'll put my money on the tradable product versus the abstract index, for which is going to be the more accurate reflection of volatility and skew in a particular product. It's an interesting idea. Like I said, I like the theoretical underpinnings of looking at a VIX terminology on an individual underlying. I'm just not sure how practical, and, for the most sophisticated in our audience, they can already get most of what that's going to offer you through what's already trading right now.
Yeah, I mean, my thought is, and this might even apply right now. I was actually talking to someone at the SIBO. Weeklies are only 3%. Weeklies are only 3% of SPX vol. If that gets up to 10%, that's going to start really affecting things. So that's something to think about is, we've been talking that maybe they put a little too much on some of these cheap downside puts. Maybe they need to start putting some small weighting in that last week of trading if they really want to get an accurate index. And for something like Amazon, that 30-day VIX would have been almost, and Netflix even more so, it wouldn't have properly priced in the fact that a lot of this volume kind of moved toward the weeklies. I mean, if you look at Amazon, the open interest on the 180 and 85 strike, the volume today in the 1 month weekly was about 20. It looks like it was over 20,000 contracts, and the kind of volume on the the around the monies, the 80s and 85s in February was, hey, guess what? About maybe 30,000 contracts. So you're basically saying, let's ignore 2/3 of the option volume that are playing, 40% of the option volume that is playing these earnings. And it just doesn't seem like it's viable.
Yeah, that's an interesting point, that they're not taking into account a lot of the other activity that's going on. That's the direct result of some of the experiments that the SIBO has been doing with these rolling weeklies into earnings and that sort of thing. If you look at the Amazon volume numbers here, you can see that everyone was playing in either the weeklies or regular Feb. There was very little playing in the new weeklies for next week. I mean, look at the open interest on the 180s in the weekly of Jan versus the first weekly Feb of the 180s. I mean, it's twice as much. It's about 4 times as much in the Jans for the 185. So yeah, people are definitely coming to play in the weeklies for earnings, and I understand that's a perfect product for that.
Yeah, no, it's a wonderful product for that, but like we're saying, I mean, it seems like that they're kind of bringing an old ideology to something where they're kind of crossing the streams, if you will, and bringing an old ideology, trying to say that, and a new ideology together, and I think it's going to kind of produce some results, at least during earnings time, that aren't real indicative of where Amazon vol really is.
It's going to produce a twisted, mutated baby. SIBO is a legacy exchange. They always had to deal with legacy issues. Even when the electronic world was swamping them, they had to deal with floor-based trading. And now they have the same issue with VIX. VIX has been both a blessing and, I wouldn't say a curse, but an issue to overcome for them, because it's become such an enormous phenomenon. And you ask anybody over the SIBO, and they'll admit that VIX has eclipsed the SIBO as a brand. It's become far more well-known. And so everything they do now going forward has some foot in VIX, even when it's not particularly relevant. They're trying to leverage this VIX brand and leverage products off of it and try to make lightning strike twice for them. I understand why they're doing it, but I agree also that it's probably not the ideal way to create new products going forward. And before we keep going, I want to mention to our listeners, we have been joined by Big Tim Navabi over at Options Express. Tim, how are you doing today?
I'm doing pretty good, thanks. How are you?
We were just talking about Netflix, if you want to throw anything in. I'm sure OX customers were playing quite a bit, especially you say a lot of your customers are premium sellers, and we were just talking about how the skew was bid up out of control, especially in the weeklies.
I'm sorry, real quick here. Those were probably, the weeklies on Netflix were probably one of the more popular, if not the most popular contract over the last, I would say, 3 or 4 days. Today, it's definitely up there with one of the OX most actives.
So how could it not be at that point when we were just talking about, $30 out of the money puts almost were trading for $1.25 with 2 days to go? I mean, if you have a lot of premium sellers, there are so many ways you could leg into that with a great spread that and sell that premium level that it's almost too tempting to resist. Mm-hmm. And Mr. Tusa, how are your commodities faring today?
Well, it's a great day to be short commodities, that's for sure. This is just, I think that what we're going through right now in the commodity world, oil's down 2% on the day. Gold's down 2.5% on the day. Silver's down just over 2% on the day. And just in looking at it, I really believe that it's when you have big movements, you're going to get bigger corrections. Silver almost doubled over the course of a year. So silver being down about 10 to 12% off of its high, it seems scary, especially if you got in right at the high. But in reality, it's a correction. And I stand by my long-term bullishness on commodities, and I think that we're going through a correction right now. And the way with which we play them, once again, I hate to sound like a broken record, but it's important to have risk management in place and have hedges in place so you can stomach times like this.
You know, it's funny. We've been talking about silver a lot, and so we've been experimenting with some various positions in SLV, and we actually went out and sold the weeklies on the 26 puts for those, and they were actually trading pretty well. Then silver hovered down to around the 26 strike, and so all the decay that should have come off in those weeklies over the last few days was kind of held up as vol crept up in those strikes, while everyone was afraid to sell those weeklies with silver hovering on the 26. And finally, we had to move some things around. We had so many positions in that account to free himself up to actually trade in Netflix if he wanted to. So we ended up closing out the silver short position right before the big bounce yesterday when it all came off. So it's pretty funny. So here we had taken the risk. We had done the short position right when it was untenable to do so. And right when we closed it out was right when all the actual decay we wanted came crashing in. So that's just another lesson for our listeners in asymmetric time decay and how lots of times things don't always decay the way you want them. And with that, I think we'll close out the old trading block and move right into the odd block.
The odd block.
And welcome to the Odd Block. This is the section of the show where we discuss what's lighting up the tape from an unusual activity perspective. We're going to start things off with Genco Shipping and Trading, GNK. And these guys closed at $11.51, down 75 cents. They do an average daily volume of about 3,500 contracts. Say they did over 21,000. And what we saw today is a lot of bears coming to play in Genco. And this is a name that hit a 21-month low of around 1170, and actually they're lower than that now today. So the bears are definitely out in force. It's been helped by a number of recent analyst downgrades. Wells Fargo and Deutsche Bank all seem to be cutting their ratings on this stock. And so we saw a lot of activity, maybe not surprisingly, in out-of-the-money puts in both March and April, starting off with about 7,600 of the March 10 puts trading today for. Well, before today's session, there's open interest of just 50 contracts on that strike. So this is all new paper coming in on the bearish side. But all of them were bought for about 25 cents. And a lot of them, the bulk of them actually went up in the first 30 minutes of the day. So these were aggressive trades going up. We also saw another about 1,200 of the April 10 puts being purchased for about 40 cents. And some additional bears paid about 25 cents for 2,500 of the April 9 puts. Not surprisingly, given the movement in the underlying and the buying activity on the options, the implied volatility is up about 7% today to about 49.5. So, yeah, a lot of bears. This is not a name that I particularly follow, but an interesting one to see that following the downgrades, the bears are looking for more downside in GNK going forward. Mike or Tim or Mark, any of you guys play at all in GNK?
No. That's the first time you're bringing up one that I've never even taken 3 seconds to look at. So, but maybe I might have to. Anytime we see something where there's a ton of people getting in there thinking something's going one direction, that can create opportunity. So, with the vol up that much,
I'm going to talk about one of those in a minute that we talked about last week and how terribly wrong they were. But yeah, go ahead.
Well, with the vol with the vol that high, you might want to look at a call sale as opposed to a put buy if you're really bearish. That's the one thing I might comment. Or a call, or like a call spread, might be the smarter play. So anyway, that'd be my one little thing I might point at if I was looking at that.
And so I'm sure you're long that for all your customers, right? GNK in all your portfolios.
You thought you said
what we're doing is keep in mind we're taking the other sides of all those trades too. So we're just we shorted all those.
Oh, that's you. all that.
Not really.
Juicy
regulator who may be listening.
If you had said GNC, he'd be really bullish. But since it's GNK, not as much. They used to call Mike Joe Weeder back in grade schools. Mike Joe Weeder Tusa.
Oh, so he was an old man with a mustache whose head they pasted onto another weightlifter's body?
Yeah, no. Believe it or not, Mike was the one guy that ever bought that ad out of the back of Boy's Life where it said "Grow muscles fast," and you could buy the plan.
Stop the bullies from kicking sand in your face at the beach.
Yeah, exactly.
Listen, I've been drinking milk, and I'm going to be bigger in a few years, and I'm not going to be taking that from you anymore.
Oh, wow. Still strong bones, muscle.
Sebastian, bullying around the former lineman for the Bills. Sebastian is a pretty frightening fellow when he gets going.
Oh, yeah.
Yeah, and then following it up with Mead Johnson Nutrition Company, MJN. This one closed $59.61, down 41 cents. And this is another one. They had earnings today, and this is a provider of pediatric nutrition. Well, this name does about an average daily volume of about a little under 4,000 contracts a day. It traded at over 8,000. What we saw was essentially a size risk reversal going up in this one, but it was a long-term risk reversal. It was kind of interesting. They had earnings before the market opened today. They beat the street, so the stock was down a little bit, but still this guy thinks there's rosy skies ahead for MJN. We had one guy coming in and selling about 2,000 of the Jan 2012 50 puts for $268, and he bought about the 2,000 of the Jan 2012 65 calls for $358. So he legged into this risk reversal for 90 cents. And it's interesting, there's a lot you can make of a bullish risk reversal like this. It's not the most complicated trade, but it's interesting for our listeners to see someone using these risk reversals to leg into a size position, and also to do it as far out as he did. You don't often see sizable bullish risk reversals going up a year out or more. This guy is obviously looking to put a long-term bullish position on in the underlying, and he doesn't have qualms about how he does it. If the stock drops a bit down below 50, he's not too averse to owning it down there. But an interesting trade nonetheless.
I like this strategy. I don't know the stock, so I don't necessarily know if this trade is good or bad, but the strategy itself I'm a big fan of, just because of the fact that right now the stock price, just looking at this as a longer-term investor, the stock's at just under 60, and you basically have a built-in put option, so to speak, for $10, in that if the stock goes down $10, you're still not at risk until it actually touches that level. And then from that standpoint, should it go up, you have any of the upside past 65. And sometimes if you find some of these, you can actually put them on as ratios. And let's say, for example, that the stock went up to 75 tomorrow. I know I'm exaggerating a little bit, but then theoretically, we typically don't do these that far out. We usually go around the 6-month level if we're going to do something. That's probably about as far out as we go for the selling side of it. But one thing that you could do, you could buy to close the short puts and then perhaps sell to open a call option, creating a very low risk. And when I say low risk, it means just because of the fact that the premium will be covered, but you just basically shift the risk from the short put and then give up upside past a certain point, and then you can still stay in the trade and maybe have a little bit more upside, but you're getting rid of that short put risk, and then you have the ability to put on another trade or make adjustments or do a lot of different things. But the flexibility and the adjustment capabilities of this trade, I'm a big fan of.
Yeah, we often recommend these sorts of risk reversals to customers who are looking to put on bullish positions, just because it is a very, very flexible strategy. It's a good way to limit some of your exposure so you're not just going out and taking a flyer on an upside call, or you're not just taking a short position. It's actually a good way to take a more nuanced, bullish approach than doing either of those legs individually.
I don't know if you saw this, but there was some massive long-term bull buying in call buying in Lowe's in July and in Jan 2012. They bought a big, huge chunk of the July 30 calls. They bought a massive chunk of the 30-35 call spreads. Ended up producing something in the realm of, about 70,000 calls trading in that product and something less than 1,000 puts or some ridiculous ratio like that. And I understand why they were doing that. The vol is really low. The stock is it's been creeping up. When I see a stock that I think's going up with low volatility, I love buying calls, especially ones with a lot of vega that are, can maybe pick up toward the upside kind of cheap. So these guys paid 40 cents for the July 30s. That's a nice trade if you think this thing is going to be on the rally. So that was the one thing I was looking at. I don't know if you saw that, Mark. So.
Yeah, that came up late in the day, so we didn't really have time for us anyway. It came across our tape late in the day, so we didn't have time to throw it in there. But I'm looking at it now again, and you're right. It is a interesting play. This is not a name. I don't play in the home builder, home supplier segment very often. Everyone I talk to who's active in the sector said they all are definitely more bullish on Lowe's than they are on Home Depot. Seems to be a better store, more well-run company.
Would you say they're high on low?
Oh, there you go. And yeah, I guess if you're going to take a flyer, this 30 strike in July doesn't look that bad. Not so keen on the leaps on the 30s.
Yeah,
but,
I actually was looking. I thought the 28s for around $1 seemed like the real value bet there.
Well, these guys have twisted the skew a little bit now. These 15,000 of those is going to bump up all those calls in that range.
Yeah.
Look at the 29s and the 28s and Julys have 200 some odd volume today and a couple hundred open interest each. So this 15,000 lot's going to change some perspective, so to speak, out in the calls. While you mentioned this, there's another one that came across our tape late today that I didn't throw in. It's IGT. Maybe you saw this one today, Mark. International Game Technology.
Yeah. They make slots.
Yeah, exactly. They make slots. And what we saw today, what was interesting actually, was just one sizable trade. This is the name that closed at $17.47, down pretty much unchanged on the day. They do an average daily volume of 2,000 contracts. They did over 30,000 today, and that was all pretty much in one trade. We saw one sizable trader come in and hit 30,000 of the Feb 17 puts for 30 cents. The bulk of them went up in a block of 18,000.
This guy does this a lot.
Really?
And he's almost always right. He started doing it at 12. So he's been pretty good. Yeah. I got to give this guy credit.
Interesting. This guy essentially is just working a limit at 1670 on the stock.
Yeah.
But it's an interesting way to do it, especially with a stock that has a float of 4 million shares. It's going to be hard to get. This guy essentially is working a limit bid for 3 million shares of the stock, so kind of hard to get that in the underlying.
He's been selling puts all the way up as this thing has rallied. I don't know if you looked at the chart, but I think it was, just this summer it was more like 12 or 13.
Interesting. So he's an interesting one to watch.
Yeah. My bet is this guy's right, if I had a bet. So.
Yeah, so it sounds like if he's been selling since 12, he's doing all right so far. Yeah. And he's pocketed quite a bit for his limit orders. Another reason why Mr. Tussall likes selling puts instead of working limit orders, because you get a little money in your pocket every now and then, even if you don't get filled.
That's the truth.
That pays for all those snowmobiles over in the Tussall mansion in the mountains there. I just want to finish it off. Quick review of Kodak. We talked a lot about them last week and how size bulls were coming to play in Kodak. If you recall, I believe it was last Friday, about 12,000 of the Feb 5 calls were purchased for about 55 cents. Another 1,000 or so the following Monday, and another about 1,500 or so the Feb 6s went up as well. And before we even had time to pretty much put the show out, while we were still editing the show, the very next morning, this thing just fell out of bed. And it dropped about 50 cents from like $5 down to $4.50 with some news that they had lost or had a negative turn in some patent suits they had against Motorola and Apple. And then their earnings come out the next day and they reported a 95% reduction in revenue. So the stock just fell out of bed completely. And the stock's trading about $3.80 now. So this just goes to show that there's often the assumption that the size money is the smart money. and these guys couldn't have been more wrong. They put in about almost 15,000 plus contracts of pure straight bullish call buys right before earnings as a pure earnings play, and those have all been pretty much wiped out now just in a couple of days. And that's going to do it for the odd block, and we're going to roll right into the express block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express/Spread Block. This is the section of the show where the boys over at Options Express regale us with the latest tales of daring do over behind the scenes. And Tim, what do you have going on? What do you have to tell our listeners today from Options Express land?
Well, I just kind of want to talk about commodities a little bit here. I agree with Mike. I think we're in a bit of a correction right now, and it's kind of steep, or has the potential to be steep, for how steep it has gone up. At the same time, we're seeing some of the other commodities really sort of shine through, like sugar, cotton, cocoa. Some of those softs, they are doing pretty well. And it's the first time I've seen people come in and actually sell puts on those, or put spreads. I've been around doing this for a number of years, and selling puts on the softs, I think, is a very difficult thing to do because it's a pit traded contract. It's also electronic, but we put our orders in through the pit because that's pretty much where we can get the liquidity. And those are some pretty hard hitting New York traders that we're up against. So it's not an easy thing to do. But yet I am seeing a couple of people come in and sell some puts on cotton and doing some on sugar as well. So that's kind of what I see in commodities. And, as we were talking about before, Netflix and Amazon, those two names right now are real popular. As I've mentioned before, that, we see a lot of put selling, or premium selling, I should say. Believe it or not, I've seen probably just as much debit spreads on these two stocks. It's a little bit surprising, but at the same time, I think people just really would rather take that sort of level of risk rather than the premium selling, which, from a risk-reward ratio, is not very attractive. So
that's interesting to me because I know you said a lot of your customers usually lean towards the short end of the spectrum.
Mm-hmm,
but to see them coming out and playing long, especially in some of these steep skews that we're seeing in, for example, the weeklies in Amazon and Netflix, that is a little bit surprising to me. But it's also interesting. It's showing that you're getting a more nuanced risk perspective across your customer base. You haven't just cornered the market on premium sellers, and that's
right. Right. Something else that I'm seeing too was people going out the longer term contract, a lot of calendar spreads. Going out the longer term contracts and then selling the weeklies. I'm starting to see that a lot too, especially with some of the volatility that we are having in some of these stocks. So that's pretty much it here at Options Express. I haven't seen too much else. I mean, those are really the popular stocks. Haven't seen too much on Microsoft or AT&T even. So that's all I've got.
Well, thanks for that, Tim. I'm sure our
Sure.
listeners appreciate your giving them a glimpse behind the curtain over at Options Express, especially at this time of year when the earnings are coming fast and furious. And hey, what about Ford? I know Ford's going up tomorrow. You guys have a lot of activity you're seeing in Ford?
Yes, a lot of activity in Ford. Same thing, people here I've seen actually, go long calls, sell some put spreads, go long some calendar spreads. So people are definitely, they're feeling comfortable with Ford right now, as well as I kind of think they should.
Yeah, I tend to like Ford myself. They're one of the interesting ones I like to keep an eye on. I've been playing with them in various capacities since they were 10 all the way up to this range. They're an interesting car company these days, unlike most other car companies who announces new cars at, let's say, the Detroit Auto Show. They announced a new car at CES, which is I don't think ever been done before. They did their first all-electric car there, too. So they're doing interesting things there now.
No, yeah, no, I keep going. I totally agree with you. I think that was very interesting how they did that, and they're really trying to go for that, individual that is, trying to live a greener life, but yet somebody who's connected, on the web. So, yeah, I think they're bringing on a lot of very attractive products.
And they're really doing a good job. You're right. They're good companies reinvent themselves throughout time. And granted, they're still a car company. They're not trying to do something totally different like Coke did with New Coke back in the 80s. But they're still evolving with the times. And there's a lot of good things to be said about Ford.
Couldn't agree more. And I think with that, we're going to close out the old Express/spread block and roll right into Around the Block.
If you're interested in becoming a professional options trader but feel a stronger understanding of trading fundamentals is required before pursuing a mentoring course, sign up for Option Pit Mentoring's Level 2 Prep Course. Topics covered will be volatility, the Greeks, position setup, and basic management of income option positions. Classes start on January 24th. Register at optionpit.com/event. For Option Block Insider Radio listeners only, receive a $100 discount when you use the promo code OI2011. That's optionpit.com/event.
Around the Block.
Welcome to the Around the Block section. This is the section of the show where we discuss what's on the horizon for the next few sessions. I know a lot of us will be watching Ford tomorrow before the open. That'll be an interesting one to watch. A big indicator of how the economy will look going forward. What are you guys watching for the rest of the week?
The one I'm looking at is I've been really paying attention to the February VIX futures. And something interesting's happened. Last Tuesday, when I wrote kind of that national piece for the street, the VIX was trading under 16, yet the futures were trading over 18. All right. Now we've got, and the VIX rallied all the way. I think we broke 19 momentarily, didn't we? Yeah, we briefly touched 19. All right. Since we touched 19, the VIX has fallen off a couple of points. The cash VIX is actually trading almost $1 lower than where it was when last Tuesday. Now, I know there is some, time decay in the VIX future, but not like this. Right now, the VIX futures are trading at an extremely, extremely light premium to the cash market. Two things I'm noticing out of that, okay? One, I don't think people are really expecting much for the next couple of weeks. Otherwise, that VIX future trades at a bigger premium. Two, that VIX future is going to do a better job of hedging temporary short-term increases in volatility than it normally would. Normally it tracks at about 70% of the VIX cash. Here, I think we're going to be seeing more like 80 and 90%. So, vol bettors, this might actually be a decent vehicle to get in if you're looking to really take advantage. That also means that Feb calls are going to act more like the VIX than maybe people are used to. So it's something I've really found kind of interesting. I don't know if you watched that spread tighten up, but it's been incredible.
But yeah, that's something we've been looking for a while. I know we've talked on the show in the past about how the term structure, or the skew and the downside of the SPX and then the VIX even had gotten very light, and looks like people weren't anticipating that much of a downside. But yet there was still a hefty or a fairly decent premium in the first few months of rolling out in the VIX futures. And so it kind of made people who are looking to hedge in maybe March VIX options or something like that, a little bit farther off options in VIX, a little more leery because there was that premium built in. So if that's coming off now, then that'll be a better play for some of these people who have been waiting for a reversal in this market, who have been waiting for a pop in the VIX, and for whatever reason they just didn't want to pull the trigger because there still was too much premium in those options. Maybe now finally is the time for them to dive in and pick up some upside in the VIX in February, March, or beyond and get their hedges on.
Yeah. So, yeah, I mean, that's what I'm looking at is, I don't see anything for the next couple of weeks based on what, the market is telling us. And then March is still at a nice premium to the Feb, but even that's not as high. So it's real interesting. It's cheap. Right now, it is really cheap to hedge volatility risk with VIX options. Very rarely do we see that. But right now, I think it's despite kind of the low vol in the SPX, the play is get sell the individuals, buy the big indexes, buy the VIX as your hedge. So that's kind of what I've been looking at.
And just a quick earnings update. Amazon looks like they've stabilized around 167 or so down about 17 points right now in the after hours. And Microsoft pretty much unched. So unless their earnings were a non-event, they must have come out by now. So maybe they're waiting for the conference call, or maybe it's just the earnings were a non-event because the stock's unched in the after hours.
Yeah.
What about you, Mike and Tim? What are you guys watching for the next few sessions?
Just as usual, we're watching the economic indicators. Excuse me. Nothing too special. I know. I believe Ford has earnings coming out tomorrow, so we're watching them. But there's not a ton going on that we believe is going to be ginormous market movers at this point. Just as usual, we're definitely watching commodities because we're getting closer and closer to levels where we have to make adjustments, and that's just more of a pricing viewing as opposed to a news event. But nonetheless, we're just continuing to do what we do.
And you do it so well, Mr. T.
Then we'll go salmon fishing.
Tim, what are the OX guys focusing on for the next few sessions?
Mainly playing defense. We are definitely seeing some activity over the last 2-3 weeks. So we're very busy. So we're really just trying to stay sharp, provide the best service we can, and keep picking up those phones. We're just, like I said, mainly trying to get through this earnings earnings season, earnings time right now. That's pretty much it. We're just very, very busy right now. So
yeah, I'd imagine with so many people playing in the weeklies and so many earnings coming out just one after another, you guys must be just answering the phone nonstop all day long.
Nonstop, yeah. We're also very excited about our 10-year anniversary.
Oh, yeah.
So that's a very big buzz in the office. So everyone, is just kind of, staying busy answering the phones and, just being excited for OX. Nothing too major as far as, what we're really trying to look for. I did see that one of our future analysts, he did put out an idea for selling a bond spread. And he does this in a newsletter that he has. Not a newsletter, an email. It's called Espresso. It does come out every day.
We run that on our site every day. That goes up on our site. That's the futures letter, right?
Mm-hmm. So, that's what I can see what Zaremski was talking about. And basically, it looks like what he wanted to do earlier this morning was sell a March 123, 124 call spread. For about 16 ticks, about $250. Total risk would be about $1,750. So, looking at the charts and everything, I can kind of see what he sees. I think it's a pretty good, limited risk trade. So, as far as, what our analysts are looking at, that was his trade for today.
And that's going to do it for this Around the Block segment, and it's also going to do it for this episode of the Option Block. I want to thank all of our hosts for coming on the show today. Mr. Sebastian, the Greasy Meatball himself, had to run early, but as always, feel free to surf on over to to optionpit.com for the latest on his webinars. And also, you can still get in on that OI 2011 deal for his January webinars going on right now in his instructional series. So surf on over to optionpit.com for that. Mr. Navabi, I know, as usual, you guys have that educational event coming up in a few weeks, correct?
Yes. I'm trying to bring that up here right now as far as what the event is specifically. Are you talking about the one in Dallas?
One in Dallas, yes.
Yeah, that is sort of the talk around the office, who's going and, who's not going, what are we going to be talking about. I'm just trying to get a little bit more information here. Yeah, it's the Dallas workshop. It's February 5th. It's from 8 in the morning until 3 o'clock. So, yeah, that should be a good workshop. We always have a good time in Dallas.
Have you managed to finagle yourself a ticket?
I have not. No, not yet. Don't want me on the phones.
Yeah, it's a busy time for you guys. And Mr. T, what are you guys up to over at Know Your Options, Inc.?
Got a couple things going on this week in our weekly webinar series. On Sunday night, we're going to do a webinar on strike price selection, and on Monday night, we're going to do one on ratio spreads. But we just got a couple of things squared away with Options Express since our last show. I'm going to be guest speaking at an Options Express event on Saturday, February 12th in Minneapolis. It's an all-day event. I'll be speaking around noon, I believe, but throughout the rest of the day, the Options Express Education Department will be speaking, and they do a great job with everything, but they've been kind enough to let me be a guest. It's going to be at the Holiday Inn and Suites in Minneapolis, in Bloomington, it's Holiday Inn and Suites Minneapolis in Bloomington, Minnesota, and if you have any questions on it, feel free to contact us at Know Your Options, or even the Options Express people. I'll have answers on it as well. But it's a free event. Love to see you there.
Is that the event on the 12th, February 12th?
It is.
Okay, yeah, February 12th, 8 a.m. to 3. Yep, Minneapolis.
And, of course, if you want to know more about any of the unusual activity or the breaking events that we discussed from the options market on the show, then surf on over to theoptionsinsider.com. You'll also find our forum there for this show, so go to optionsinsider.com/forum, and you can find the place where you can send us your questions and comments for this show. If they're interesting, we'll read them on the air. Again, I want to plug that voicemail again, too. It's 312-544-9356. Call us up, leave us a message, leave us your questions, your comments, your hopes, your dreams. And once again, if they are interesting, we will read them on the air. You can also send us a DM over Twitter. You just follow us at Option Block and send us that way. We're working on getting some Facebook stuff up and running for this as well. So you'll be able to get us by any means. And the goal is someday soon to have maybe even a quote-unquote live show where we can have people dial in and ask questions live. It might be kind of fun. So, yeah, with that, we're going to thank all of our listeners for tuning in and downloading and subscribing to this show and making it such a success. And we'll see you next time on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.